So today was a green day for the stock market, but will the selling pressure continue, or are markets finally at a bottom and showing signs of a recovery? What's going on, guys? It's Wiki with TechBud Solutions, and I wanted to quickly rephrase something that I said in today's earlier video. I ended up actually taking it down because I just didn't like that what I said. I misspoke and it was not true. What I stated was because inflation came in lower than what was expected, that the Federal Reserve is less likely to cut interest rates, and I misunderstood that based off of looking at the Fed rate monitor tool, which again is completely not a true statement. If you look at history, when inflation is going up, just like we saw in the past, when inflation went up to highs of 9.1%, the Federal Reserve actually began raising interest rates to therefore slow down the economy, right? Because if they're seeing that the economy, again, if inflation is going up, they see that the economy is picking up and they need to slow it down. How do they slow down an economy? Well, they make it less expensive, or they make it more expensive to borrow money. And that's the mistake. I almost did it again. That's the mistake that I made in today's earlier video, that when inflation is going down, the Federal Reserve is most likely to cut interest rates because, again, the market can tolerate it. So yeah, inflation can begin to uptick, but at least it's low enough that it could tolerate it. When inflation is incredibly high, as it was at 9.1%, they're not going to cut interest rates then because they don't want it to push up higher. They'll raise interest rates to slow down the economy, making it more expensive for people to borrow money. I just wanted to make sure that I correct that just so it's well understood. With that being said, inflation report did come in today and it came in lower than what was expected. That is good news for the market. We'll see how the Federal Reserve next week decides and reacts. Remember, Jerome Powell, who's the head of the Federal Reserve, takes it meeting by meeting, and he determines based off of not just him, but the entire Federal Reserve, they'll determine based off of that report and the series of other reports that have been released in the past few weeks, if that is enough to cut interest rates. But again, this is the part where I was, again, kind of just a little confused. According to the Fed rate monitor tool, which is not 100% correct all the time, remember, the Federal Reserve at the end of it gets to decide if they're going to be cutting interest rates or not. But according to this Fed rate monitor tool and today's most recent CPI data report, there is less than a 2% chance that the Federal Reserve is going to cut interest rates in the month of March. There is a 98% chance that the Federal Reserve will pause. Remember, the Federal Reserve during the FOMC meeting will decide if they're going to pause, if they're going to cut interest rates, and then 30 minutes after, Jerome Powell goes live and then he begins to explain why and then answer analyst questions. I will be going live for that FOMC meeting, so it's just another reason to subscribe and to turn on your post notifications so you don't miss out. But as of right now, the markets did react in a positive way once this report came out. But the thing that I want to point out is, remember, in the day, the markets were up 1.13% for the NASDAQ market. Some individual stocks saw much larger gains. Tesla saw a 7.5% gain. If we look at NVIDIA saw a 6.4% gain, and even more during extended hours. But the thing that I want to remind you for most of the market, look at the S&P, look at the NASDAQ. This is NASDAQ's QQQ. Again, I just want to point it out. From the highs that we made during the pre-market session after the report came out, right? We hit highs of 481.60. We never made new highs. At market opening, we went back to retest. Then we got aggressively rejected. We went back to retest, aggressively rejected. We went back to retest, rejected. After market hours, overnight hours, rejected. So again, it's just important to note because again, different time frames give you different perspectives. With this time frame, hey, yesterday we saw a lot of consolidation. We kind of saw consolidation today, but there was a slight uptick, so it kind of looks bullish. But then again, on the 1 hour time frame, a much different picture is what is painted, right? A strong descending pattern, moving average that is consistently descending, and lower highs and lower lows. And think about this. If we do get rejected here, or you buy here and then we end up getting rejected, you are literally buying at a resistance and at one of the highest levels right before a potential downturn. Now, of course, we can't predict the future. And if what has been affecting the market is no longer negatively impacting it, then yes, markets can begin to recover. But we need Trump to stop this trade war volatility if we want the markets to stop reacting to it, and as well as, of course, see how the Federal Reserve reacts to this most recent inflation report. I want to see if we begin to see a change of sentiment because now the markets can digest that most likely the Federal Reserve is not going to cut interest rates sooner than what is expected. And of course, the market wants sooner rate cuts. I want to explain why. when the market or when the Federal Reserve cuts interest rates, remember, they make it less expensive for people like you and I and businesses to borrow money. What do you think naturally happens when it's cheaper to borrow money? We'll borrow more money and then we'll spend more money. And if we spend more money, it boosts the economy, right? Therefore, growing our economy. Therefore, markets pump higher for longer. Makes sense? So I just wanted to show you the different perspectives, the different timeframes, and how, again, we're still very much on the bearish side of things as of now. It doesn't mean that we can't change direction. I just don't want you to think that one day defines a market reversal. With that being said, if we do begin to show early signs of reversal, I'll make sure that I make you very well aware with, again, once we get that confirmation. But other than that, again, I'm very excited to see how the market trades tomorrow. Tomorrow, we do have the initial claims, continuing claims, and the PPI report. We'll be talking about that a little bit more in tomorrow's live trading session. And if you want to tune on in, it's the second link in the description down below. I want to remind you, it breaks down to $1.35 per day if you want to watch me trade live. And again, it's the second link in the description down below. It's a one-time payment, lifetime access, and I'll see you tomorrow at market open for our live session. Like always, let's make sure that we end the year on a green note. Take care, team.